The Rebel Capitalist Show. Give us an update, man. What's going on in the real estate market? What's going on in mortgage rates? I'm assuming it's still booming in the residential areas and the starter homes.
It is, I've been doing this since I was 19 years old, and I don't know if I've ever seen it this busy. I've been through many cycles, and it is crazy, George. I mean, who would have thought this would have turned out this way? But the real estate market is just absolutely booming. And my thesis, George, is that housing, amazingly, housing is actually cheaper today than it was back when my mother purchased her first home in, wait for it, 1976, 5 years after we went off the gold standard. It's also cheaper than it was in the fabled year that George Orwell named a book after, 1984. And it's also cheaper than it was right before the Great Recession in 2006. Now, I know what you may be thinking, Jason. This is your last time on the show because you're crazy.
I think they're putting that in the comments right about now, Jason.
They are. Folks, I'm not out of my mind. And George, maybe I'll just share a couple of slides with you on the screen, and I'll go back and forth, so I won't keep this on the whole time. This is interesting. Business startups, before we dive into real estate, they are at the highest level they've been since the Great Recession. So a lot of people using this time to start new businesses. And I think a lot of these companies, as the companies that were started during the Great Recession, will become, some hugely successful enterprises. So we'll see a lot about that. But the question everybody keeps asking is, are we in a bubble? Are we in a bubble? That is the question I get asked all the time. It's certainly one of the questions you talk about a lot. And, there's a lot of reason to think that we are. And I love the way you look at content, because you always look at a long historical history. And so this is a housing price chart, housing price index of the last 112 years. It's not a short view. It's 112 years since 1900 up to 2012. And of course, you've got the Great Recession in there. You see a huge run up post gold standard 1971. A lot of inflation in the system as we went off the gold standard.
That's nominal, though.
Nominal. Fair enough. Yes, good point. Not inflation adjusted. And then, we see it go down, right? And if you look at a chart like this, you've got the Case-Shiller index compared to the consumer price index. We all know those are both maligned. Case-Shiller maligned in the sense that it profiles 20 markets for their main index. 75% of those are cyclical markets we would not recommend for investment. And the consumer price index, much maligned also, but it is what it is. We've got the official statistics, which are understated. We both know that, and your audience knows that too. So you can see the divergence here between housing prices and the CPI. And it would lead a lot of people to say, we're in a bubble. This is way out of sync. It can't continue, right? Even you look at the Case-Shiller index compared to the S&P, okay? And that's out of sync, right? If the S&P is a proxy for the broader economy, then housing prices are out of touch with the S&P. Fair enough. I agree. The problem is people so many times are looking at the wrong thing. They're looking at the wrong thing. Remember, nobody buys a house based on a price. They buy it based on a payment. So I'll just share with you a couple of things here in terms of our rich Uncle Jerome Powell. I
Uncle Rico.
Philosophically, I disagree with almost everything he does, but he is my rich uncle. He's your rich uncle. And if he'll give us free money, I'll take it. Okay. So that's the thing. And, as I've shared before on your show, to understand inflation, we got to understand the difference between nominal and real, price and value. Inflation is this insidious hidden tax. It destroys our purchasing power, but it also destroys the value of savings, and that's bad. Stocks, bonds, even equity and real estate. Inflation robs us of the profits from those things, but thankfully it destroys the value of debt. and it redistributes wealth more powerfully than anything else because it redistributes that wealth from lenders to borrowers and from old people to young people. Why? Because old people have assets, they have savings, hopefully, and young people have debts. And so inflation destroys that debt. So here we go. 1976, the median house price, $44,200 in 1976, and the interest rate, 9.01%. Here's how that deal looked. Your house payment for that median price house would be $354 per month. Now let's fast forward to 1984. The famous book that everybody better read because sadly it's coming true. George Orwell wrote 1984, I believe, back in 1948. And he's sadly, this is all prophecy, right? It's becoming way too true. And, you know, the language is maligned and words have double meanings and we're being surveilled everywhere. And it's, you know, another discussion for another day.
Yeah.
$81,000 is the median house price. Interest rate very high, coming off of the Jimmy Carter stagflation era and Paul Volcker beginning to break the back of inflation, 14.68%. Your house payment is now $1,003. Okay, but let's look at the difference. With some inflation in there, you actually got that house for $356 a month less. Okay, less. Now, I know what you're going to say, and you said it today, and it's very true. I'm not adjusting earnings in here. Earnings are not adjusted in here. Okay, this is just interest rate, house price, and inflation by the official stat. We did not put earnings into this, and earnings, just like the mortgage payment, are also diminished by inflation. Earnings are attacked by inflation. Wages, right? But look at 2006, because now interest rates are a lot lower. House price is a lot higher, $235,000, and the mortgage interest rate much lower, 6.78%. The payment is now $1,532, but adjusted for house price, interest rate, and inflation, official inflation rate, your house actually got $414 a month cheaper. People buy a house on a payment, not a price.
So you're just talking about the payment in real terms went down.
Right. The payment in real terms. Again, not adjusting wages. Okay, so, you know, that's one thing to keep in mind. And the wage growth has obviously been uneven, right? From 1977 to 2018, Americans mostly didn't have a real dollar pay raise, largely because of outsourcing, because of understating inflation, and, you know, shipping jobs overseas and so forth, right? But it's pretty interesting. So now let's look at today, okay? And this is, by the way, you know, from last quarter, okay? So it's not completely current. But the median price, $313,000. Everybody's thinking housing's really expensive. It's more than it was in 2006. Okay, there's a bubble.
Housing payments.
Are you sure? Right?
I'm going to correct you.
So,
housing
yeah.
payments.
But look at the interest rate as of July 30th, 2.99%. That is so artificially low. It's absolutely insane. You and I both know, George, your shrewd audience knows that we are quite literally in an era of negative mortgage rates where even if you never rent out the property, with real inflation and real tax benefits because the interest is deductible on the mortgage, you are getting paid to borrow the money on a vacant house. Okay, but you're never going to keep a vacant house. You're going to rent it. Okay, so it's much better. But regardless of that, here's how it looks now. That mortgage payment is now only $1,319, rounded off. And in the last 14 years, your house payment has gone down by 657 real dollars. The only thing not in this analysis is wages. This is a comparison of housing price, interest rates, and inflation. Okay,
Right.
The house got cheaper. Okay, the house got cheaper. Now, I thought we'd go way back to 1976. That's the year my mom bought her first house. and it's a bicentennial year. It's 5 years after we went off the gold standard. The 70s were typified as a very tough decade. Stagflation, Jimmy Carter, the misery index, blah, blah, blah. We've heard it all, right? So from 1976 to 2020, the house got $299 cheaper per month.
The house payment.
The payment, yes. Principal and interest only, does not include taxes and insurance, okay? So is there a bubble? If so, when will it pop? Remember, it's much more complicated than this. This is simply the housing payment discussion, but at least that's an analysis of real dollar housing payments, and I hope it's helpful.